When there's a major spike in short-term volatility during this otherwise stable downtrend, it's quite normal to see sharp points around the 0 and 100 marks of the %B indicator. And as usual, a steady incline will see the %B indicator plateau close to 100. Now, with the chart transitioning to a neutral to slightly bearish phase, we can expect Bollinger Band's %B to stay mostly between 100 and 0. For further uptrend development, we want to see a continuation begin with contact at and preferably over 100. It would also be preferable to see a position maintained at or over 100, which is certainly not the case here, meaning it's a moderately strong continuation rather than an exceedingly strong continuation. That does have the Bollinger Band's %B indicator mostly within the sufficient 50 to 100 range. Naturally, the steady incline weakens around the same time Bollinger Band's %B begins to cross towards the 50 to 0 range. This next chart example begins with a steady downtrend, and then, with the line of the Bollinger Band's %B indicator rapidly closing up towards 100, we could be getting an overly bullish picture if just looking at this indicator alone, and not paying attention to the mostly flat trajectory of the candles over the past few weeks. During a time when Bollinger Bands significantly contracted as volatility decreased. When trading into a narrower range is sustained, short-term sentiment can shift rapidly and constantly. In situations like this, the market is generally moving more gradually with some short-term accelerations, which often results in candles not closing outside of 2 standard deviations from the mean for very long, if these boundaries are even reached, meaning the information from these indicators can be less clear when a reversal like this gradually takes place over an extended period, prior to the clear breakout when the trend gets underway. So remember to also pay attention to the types of candles that form when nearing the upper and lower boundaries of these indicators. For instance, here, no major downtrend gets underway since there's barely contact with the lower boundaries of these indicators before larger green candles quickly send them back up, and the next sharp downswing is not maintained, even though there's initially a consistent presence near the lower boundaries of both these indicators. There's no clear row of bullish or bearish candles, but rather an overall neutral to bearish row of candles that actually keep closing prices relatively flat during what would first appear to be a sustaining decline.